just do this. I could put on the let's call this thing executions. Yeah, I forgot I could pay it on. Damn, that's the only reason why I want to pay it on. I can show all the executions. But anyways, here's where all the partials were. Which one I went short with, boy? Oh, I went short here. Right. So I got in. Okay, I could go down as low as. Got in really good. So bought at this candle right in here. Right in here. Stop was right underneath. I was like 5 pips underneath here, somewhere around here. And took a partial here, and here. Actually, I went and I dropped asleep. So really and truly, I think the TP was here. This has to be the TP. Yeah. And then I went short up here. And I closed the trade here. And with the euro, I didn't enter euro only for the buy, but I went short because it actually. Oh yeah, euro traded up. I forgot to show euro standard deviation. Euro traded up to the second, I believe. Yeah, 2.5, and we went short. Right, euro traded up to 2.5, and we went short. And this was the entries. This was the executions here. Took profit here, and I think I closed the entire thing right underneath here. And I went short here, and I actually put back on some more here. So the trade started up here. So we see 19.5, 22, and well, the target again 40 pips was on point, but I gave him the bigger lot size. I didn't have to, hold for the long haul. But I mean, I actually recorded this video to put in front of the video that I uploaded now, but I didn't, instead of making doing all that, I'll just make the video one time discussing the why does OS put these blue lines in. Well, let me just clear, because I won't lie to tell you, time executions is be annoying on the screen. Okay, the reason why I put these lines is nothing to do with any indicator tool. The only indicator it is for me is for me to know that, okay, we approaching last week's, the previous day or the previous week opening or high point. And for me, that is a very important level, because I understand the profile of the week and the model I will be in. And to me, with the understanding of the weekly profile and whatever model you're in, when price approaching a previous day or previous week opening or high, that is supposed to happen if we in a let me say, for example, how we in a sell program. If we approaching previous week's highs and opening price, previous weeks and previous days highs and opening price, then to me, I know then there's a suspect rally. So now I automatically focusing on focus on, okay, we in this model, this period of time, why price is coming up here. So then I go and look at what day of the week. If I see something like this happening on that Wednesday and a Thursday when I know we're supposed to be looking for lower prices for foreign. Today's Wednesday. We're approaching the week start, this week start here. Right, the Monday here. Right here. When we starting to approach Monday and the next week opening, I know high probability sells would be at certain levels in these areas, because I know this move really is to just fill wherever imbalances in on the higher time frame. It wouldn't have a green candle next to these black candles, so all the imbalances is just runs to fill. So I'm looking for shorts still, and my short will be targeting the area where the initial move starts. So for example, today is Wednesday, we traded up when we're supposed to be looking for shorter lower prices. So now I could look for this level to get takeout. It might happen today, but Thursday or Friday, or maybe Friday will trade up and give us the high Friday or Thursday, right? But when next week open, I looking for this level to get traded through. So with that being said, when price open, when markets trade up, let me say market do trade up because it's non-farm payroll week, right? And let's refresh. Right, it's NFP week, and I looking to get the weekly range, and we bearish. So let me say, oh, we have a bank holiday. Oh wait, we went too far. Today's the 4th, right? So I looking for, okay, we are non-farm payroll Friday. After non-farm payroll, I looking for that to give me the high for foreign, and then go down. So after non-farm payroll, I can just sell short, and I would more than likely want to hold a position, or well, not say hold, like have a run on her. So when I go short, I would move to suit in terms of taking my profits and whatever. But instead of closing the position, I would move to break even on profits and allow the trade to just continue going, targeting the weekly low. But I would only do something like that after, let me say, there's the weekly high at the moment, Monday. If Thursday and Friday want to trade up into here, then I would wait for that to happen and then sell and hold it. So that is the real reason why I have these labels, like the Wednesday open, Thursday open, the new week open, Monday open. These levels here is just for me to identify the higher time frame liquidity pools, but really and truly I focusing on, oh yeah, and this yellow level, you see I have a double bottom here, swing low. This is our targets for me, because it will have liquidity underneath here. You know, it would have orders here for people who want to see that support, wanting to buy. So there's a high interest level. Our higher time frame narrative is to attack the weekly sell side liquidity, right down here. So that is the real reason why I have these levels, the opening price on my chart. And yeah, that is about it. I don't want to make this video too long, but that's exactly why. I don't use any indicators. I trade strictly price, strictly weekly profile, strictly periods of time away in. You know, understanding the strength and the weakness of the dollar index, how it reflects and relates to the market, and that is it. Strictly price action. And yeah, again, what the hell happened here? Yeah, again, you know, this is what I was able to understand from the markets and from ICT concepts. Everybody who learn ICT have a different way of doing it, but is at the end of the day is the same thing that ICT speaks about. Case in point, even though we're looking for lower prices, we have a fair value gap in here, a 1 hour, this wick and this wick. We trade on it. I will just draw the box to show how it acts as support. So even self, we're looking for lower prices. You could get a little short in here, a long. Once you enter when you're supposed to, go long, and targeting these highs here, and I better go long and I wait for displacement And okay, I'll go long right here. There's a little resistance here from this. When this candle open trade up on right before you close it, give us a little resistance here. You go long and you're looking for 10 pips inside of here. You will get your 10 pips and you're done. But that's besides the point. The point of this video is the highlighting of the opening price or the day, week. That is the importance of it. Trust me, when you start doing that, labeling the opening price with the understanding of what I mentioned in this video and the last video, that will give you a very, very strong perspective for the week that you're in and how it affects the market. I can see that, okay, the drug up for the week, Monday and here. So I would look to go long. I should be looking to go long inside of this 10 o'clock hour. But again, I already traded up from here and down here and also down here. You know, I never wanted to make a like a Discord chat or anything or that, or Telegram or anything, but I would look to make one of those in the future, and I would also in that I'm gonna make an Instagram. I will make an Instagram, and the Instagram account would definitely have all the stuff on it, because Telegram too easy to for somebody to how to say, use and say, you know, that is me and it's not me and that kind of thing. So I'm gonna like make an Instagram so everybody will know, okay, but that is my account in the future. And I will explain the other methods that I have with getting into here. You know? And again, it's for your studies. I've been doing it for 8 months. This month making it 8 months actually practicing it practically. But from February, March, April is where the theory was really done. The ending of February into the beginning of March, yeah. Those 2 months, month and a half, that's where the theoretical part of it was, and it was a little hard in the beginning because I had to, you know, I had real trend lines and things on my chart, and moving averages and the MACD and RSI. I had all of them things on my chart and Bollinger Band. Hey, my chart was hard to see, and them thing was distracting me. You know, obviously you'll get a little success with it and stuff. So that does make you feel like, yeah, boy, that's real good. But coming into reading price itself and day of the week and those kind of thing, it was difficult for me to make the adjustment. But I'm glad I did. And here's where we at. So I don't want to make this video too long. Again, this is why I have these levels here. This is just a highlight. We're in a certain program. We know that we're expecting lower prices. So when we see price trading up with the understanding of the day of the week that we're in, when price trade back up to the opening price or Monday's opening or Monday high, and we're expecting lower prices, and Tuesday and Wednesday was low, if Thursday and Friday we reach up there, that's suspect. And the labeling of those levels helps me realize, okay, this week, here's where we are weekly. We're not supposed to be seeing prices this high. Look for shorts. Look for shorts at our key level, right? The key level will be up to you and your understanding and your knowledge based on how you learn the charts and who you went to learn the charts, learn the information from. That is the most important thing, right? So catch you guys back whenever we get our next good setup with the deviation. So keep trading, keep practicing.